Welcome to the deep dive. NVIDIA's Q2 results just dropped.
And they're definitely making waves, some good, some, well, complicated.
Exactly. We're going to cut through it, the numbers, the outlook, and what it means for this whole AI revolution. Let's get straight to it.
Sounds good. It's quite the story this quarter.
Okay, so headline numbers first. Total revenue, $46.7 billion for Q2.
Yeah, that's up 6% from Q1 and a huge 56% jump from last year. Beat the street's expectation of around $46.1 billion.
And earnings. Adjusted EPS, $1.05.
Also a beat. Analysts were looking for about $1 a one, so, on the surface, looks fantastic.
Right, but then the stock took a little dip after hours.
Mm.
What happened there? Expectations just that high.
That's exactly it. The expectations, especially for the data center segment, are just astronomical right now.
Okay, so let's dig into that data center number. It was $41.1 billion.
Correct. Still up a massive 56% year over year, which is incredible growth by any measure. But it slightly missed the analyst consensus, which was closer to $41.3 billion. Just a tiny miss, but enough to make some investors pause.
Show you how sensitive things are. So what's driving that huge data center number, even with the slight miss? Blackwell, I assume.
Absolutely. The Blackwell platform is really starting to ramp. It showed strong sequential growth, 17%.
And they started shipping the GB200s in Q2.
They did.
Yeah.
And the Blackwell Ultra platforms alone already generating tens of billions in revenue. That's a really fast ramp.
Okay, but within data center, there's this split, right? Compute versus networking.
Yeah, and this is where it gets particularly interesting. Compute revenue was $33.8 billion, still up 50% year over year.
But down sequentially.
Down 1% sequentially, yeah. And the big reason for that was a $4.0 billion drop in H20 sales.
Right, the H20 chips, specifically designed for China under the export restrictions.
Exactly. So that's a direct hit from those geopolitical factors we've been talking about. $4 billion is significant.
No kidding. But the networking side,
Yeah.
that sounds like a different story.
Oh, completely different. Networking revenue hit $7.3 billion. That's up a massive 46% sequentially and nearly double 98% year over year.
Wow. So networking is becoming a huge growth engine in its own right.
It really highlights how critical the interconnects are. It's not just the processors, it's the whole fabric of the AI factory, making sure data flows incredibly fast.
That makes sense. You need the highways as much as the engines. Okay, so data center is the behemoth, but what about other parts of the business? Gaming.
Gaming had a record quarter, too, $4.3 billion.
Record. Yeah.
Yep, up 49% year over year, 14% sequentially. Apparently driven by the new Blackwell GeForce GPUs, like the RTX 5060. They said it's their fastest ramping 60-class GPU ever.
That's usually the mainstream sweet spot, right? So strong demand there.
Definitely seems like it. And automotive also saw really strong growth.
How much?
$586 million, up 69% year over year. That's being pushed by self-driving tech and the first shipments of their new Thor chip, the Thor SoC.
Thor, okay. And ProVs.
Professional visualization hit $601 million, up 32% year over year. So yeah, pretty strong growth across the board, really.
Okay, so good revenue, good growth. What about the bottom line? Profitability, margins?
Non-GAAP gross margin was strong at 72.7%.
Very healthy.
Very. Though, interestingly, they noted that included a $180 million benefit.
Oh, from what?
From selling some H20 inventory they'd previously reserved but sold it to a customer outside of China. So if you strip that out, the margin would have been 72.3%. Still excellent.
Got it. And shareholder returns, always a big focus.
Huge return in Q2. $10 billion total. $9.7 billion of that was share buybacks plus cash dividends.
$10 billion in one quarter.
And the board approved another $60 billion for future share repurchases. Shows a lot of confidence.
Clearly. Okay, that's a wrap on a pretty eventful Q2. Let's pivot to the future. Q3 guidance.
They're guiding for Q3 revenue of $54.0 billion, plus or minus 2%.
$54 billion, that's another big step up. Again, beating estimates. Right?
Yeah, analysts were looking for something closer to $53.1 billion, so continued strong momentum expected.
There's a catch, isn't there? Related to China and H20 again.
There is, and it's a really important one. That $54 billion guidance explicitly excludes any H20 shipments to customers in China.
None at all.
None included in the forecast. The CFO, Colette Kress, actually said that if the geopolitical situation changed, they could ship an additional $2 billion to $5 billion worth of H20 in Q3.
Wow. So that's potentially $5 billion of revenue sitting on the sidelines purely due to export rules.
Exactly. It really quantifies the impact of those restrictions. It's a significant amount of potential business just waiting.
Puts things in perspective. And beyond Q3, Jensen Huang, the CEO, he painted a really big picture, didn't he?
Oh, yeah. He's talking about a total AI infrastructure spend of $3 trillion to $4 trillion by the end of the decade.
3 to 4 trillion.
Trillion, yeah. He calls it the AI industrial revolution.
Yeah.
And he pointed out that just the top 4 cloud providers, their capital spending has already doubled to $600 billion a year. So, it's not just talk. The big players are spending massively right now.
That scale is almost hard to grasp. How are their products like Blackwell and the upcoming Rubin platform fitting into that massive build-out?
Well, Blackwell Ultra is ramping up fast. They said they're now producing about 1,000 racks per week and expect that to accelerate.
1,000 racks a week, that's serious volume.
It is. And they highlighted CoreWeave, one of the early users, seeing 10 times the inference performance on reasoning models compared to the last generation, Hopper.
10 times? That's a huge jump for AI applications.
It is. But maybe even more significant is the efficiency gain. There's a new feature, NVFP4. It's a 4-bit precision format.
Okay, what does that do?
It gives a 50x increase in energy efficiency per token processed 50 times.
50?
Yep.
That's enormous for data centers worried about power consumption.
Exactly. Lower power, lower cost, higher throughput. It directly helps their customers' bottom line and lets them scale AI much more effectively within existing power envelopes. It's a game changer.
Absolutely. And then after Blackwell comes Rubin. Still on track.
Still on track for volume production next year. They're sticking to that aggressive annual cadence. It'll be the 3rd generation NVLink rack scale AI supercomputer.
Rack scale, meaning the whole integrated system.
Right, the whole rack designed as one unit. They apparently already have 6 new chips for Rubin in fabrication. Jensen teased a whole bunch of new ideas for their GTC conference. So, yeah, they're not slowing down the innovation cycle.
Seems like that annual cadence is core to their strategy. Okay, so beyond the chips themselves, what are the big strategic growth areas they're focused on? You mentioned the China situation.
Right. Despite the restrictions, Jensen estimated China could be a $50 billion market for them this year alone if they had competitive products approved.
50 billion this year.
Potentially, yes. And growing maybe 50% annually. He pointed out it's the 2nd biggest compute market, half the world's AI researchers. They're still pushing hard to get Blackwell approved for China. It's a huge prize.
You can see why. And networking. We saw the revenue surge. Is that a major strategic focus now?
Definitely. It's not just supporting compute anymore. It's a multiplier. Their Spectrum X Ethernet platform, that's already like a $10 billion plus annualized run rate business.
10 billion just from networking.
Yeah. And they've got the new Spectrum XGS coming, designed to link data centers into these massive gigascale AI superfactories.
Gigascale AI superfactories.
His point was, if you spend, say, $50 billion on an AI factory, investing in the best networking can boost its overall efficiency by tens of %. That makes the networking investment essentially pay for itself through better performance of the whole system.
Right, it makes the whole expensive setup work much better. So optimize the connections. And is the customer base broadening beyond just the giant cloud companies?
It is. Hyperscalers are still about half of data center revenue, but other areas are growing fast. Sovereign AI is one they highlighted.
Sovereign AI, you mean countries building their own infrastructure?
Exactly. Nations wanting their own AI clouds for security, research, data sovereignty. NVIDIA says that's about $20 billion in revenue this year, double last year.
20 billion from nations building their own AI.
Wow.
Yeah.
Plus, you've got broader enterprise adoption finally picking up, and then this whole idea of the age of physical AI.
Physical AI, like robotics.
Robotics, autonomous vehicles, smart factories, AI moving out of the data center and into the real world onto the edge. That requires different kinds of compute, and it's a huge new frontier.
That definitely broadens the scope. What about startups? Are they still a big driver?
Oh, absolutely. Funding for AI-native startups apparently jumped from $100 billion last year to $180 billion this year.
Huge jump.
And their revenues exploded from $2 billion to $20 billion. So that ecosystem is booming. Jensen basically said demand is incredibly high, everything's sold out.
Still supply constrained, even with the production ramps.
Seems that way. The demand curve is just incredibly steep right now.
Okay, so with all this demand, you hear about competitors, big tech companies maybe building their own custom chips, ASICs. How does NVIDIA position itself against that? What's their main argument?
That's a key question. Their response really centers on their full-stack, co-designed approach. They argue it's not just about having one fast chip.
Because the AI models themselves change so fast.
Exactly. Models evolve almost daily. NVIDIA says their advantage is having a single platform, CUD, their software stack that runs everywhere.
Yeah.
Cloud, on-prem, edge, robotics. This allows developers to adapt quickly.
So it's the whole ecosystem, hardware and software working together.
Right. Plus, they hammer home performance per watt and performance per dollar. For customers investing billions, that economic efficiency, getting the most AI work done for the lowest cost and power, is critical. They argue their integrated platform delivers better total cost of ownership and better margins for their customers' AI services compared to just a standalone custom chip.
It's a compelling argument for integration in such a fast-moving field. Okay, so wrapping up, it's been quite the deep dive. We've seen NVIDIA post really strong Q2 numbers again.
Yep, strong overall, even with that slight data center miss that spooked the market for a moment.
Robust Q3 guidance, though, with that significant China caveat hanging over it.
Definitely. And this really audacious vision for a multi-trillion-dollar AI build-out driven by next-gen platforms like Blackwell and Rubin, critical networking, and this expanding ecosystem.
It's clear they're right at the center of this massive shift.
They absolutely are. Which brings us to maybe the final thought for you, the listener. When you hear numbers like $3 trillion to $4 trillion for AI infrastructure by the decade's end, and you see how NVIDIA is positioned across compute, networking, software, how do you think this AI industrial revolution is going to reshape things? Not just tech, but like everything. Global business, daily life, maybe in ways we can't even really picture yet.
That's the big question, isn't it? The scale is immense, and the race is definitely on. The stakes feel incredibly high.